it's doing and monitoring investor returns. All that, of course, has been turned on its head as a result of COVID. Veronica Morgan talks to Lisa Indge from Sydney-based business Let's Rent about the real impact of what she's observing at the coalface. And here's what Veronica found out.
Property investors were immediately impacted by coronavirus lockdowns. Lisa, I know that your business is based in Sydney, but through your overall industry involvement, you have insights into regional areas and also other cities. What unique challenges have property managers faced during this time?
Well, as you know, Veronica, there is the whole thing around rent relief. So we had new legislation that we needed to upskill on, basically. We needed to understand how we had to run the process of rent relief, which, as you can imagine, was quite challenging because people were frightened, anxious, and really didn't know what the future held for them.
You also had legislation. Well, you had basically federal government directives. Then that was the next stage of that was legislation on a state base, and then property managers had to interpret that, understand that, and actually then disseminate that information. That's quite a steep learning curve.
Yes.
Across the board, how have they managed with that? And the stress as well, because I imagine that you've had tenants and landlords, not necessarily presenting their best selves through this time.
That's very true. I think it has brought out probably the best and worst in people. Overall, we've found that landlords have responded very positively to requests for rent relief. We've had situations where tenants have perhaps asked for rent relief but didn't qualify, but still wanted a reduction in rent. So I'd certainly consider that's on the unreasonable end. And I think, look, overall, in terms of processes, we, as a company, we sat down and decided what we needed to do, looked at the legislation, and created a flow based on that. And we were very proactive about going to tenants, our tenant database, and saying, look, if you need help, please come to us, rather than waiting for them to come to us. So I think that a lot of other companies didn't really know how to cope with it, and therefore sent out blanket emails once they got someone who had inquired about rent relief saying, fill this form in, which is all very well. We do need to do that sort of thing, but they didn't really understand what the length of time, the impact time would be. And I think that kind of unfolded as things progressed, because initially we were doing quite short agreements, and really it has worked out to be more like sort of 2-month agreements, and some of them have only been 1 month because the tenant was only affected for 1 month. So by doing a blanket 3 months, you're really not actually looking after the landlord.
So I think too that obviously legislation on the fly, and then individually in individual businesses, you're really creating policies on the fly, right? Do you think there's been some unintended consequences of the legislation, particularly in New South Wales?
I think that in essence, it was not a bad piece of legislation, and you and I have talked about this. The fact that we had this measure of 25% of net household income reduction meant that we didn't have to deal with every single person who came through the door to ask for rent relief and provide some financial reduction in rent. And I think that was a really good thing that the government did. And as you are aware, Queensland actually followed after they didn't have that measure in place because there was an uproar. So I think that the unintended consequences were that, maybe they weren't unintended, that property managers actually had to deal with a really highly charged emotional situation between tenants and landlords, add to that the legislation. So it was really, it was very difficult for property managers overall.
Now, we've been hearing about high vacancy rates, but then they're not high across the board, are they? What areas have been, hit hardest, and why?
CBD, hardest hit, and we can imagine why. Partly new stock in that area, as well as people not working in the city. So obviously people not going into the city means who would be thinking about moving to the city. So you found in May, the vacancy rate in Sydney CBD was 14.8%. Eastern suburbs was 4%. Inner West was 4.2%, which, look, it's not great. But if you go further out, you're looking at more like 2% in Parramatta.
Yeah, and 2% is what we look at as being quite a healthy vacancy rate.
Yes.
Yeah. Is there a specific type of rental property that's been hit hardest?
So as you can imagine, the sectors hardest hit, retail, student sector, hospitality, travel. Those people live close to the city. They're often in share houses. So the share houses have been hardest hit.
Because we hear a lot about apartments and vacancy in apartments, but we don't hear so much about the actual houses. And so I was interested to know really whether there's any data on that, or you're looking at your rent roll and coming up with those conclusions.
I'm certainly looking at our rent roll, and the fact is that the stats lag reality. So, you know, we're always assessing what's going on in our own portfolio first. And to be honest, the REI vacancy rate came out for inner Sydney a couple of days ago, which was 5.8% for June, which really I found quite unexpected, because our vacancy rate dropped to 2.3% in June from 5.4% in May. So I actually expected the vacancy rate in June across inner Sydney to have declined, simply because things are getting moving again.
I've been online. I've seen that there's a lot of apartments for lease, for rent in certain areas. You might be talking sort of Green Square or Mascot or Ryder, in those areas that have had a lot of new development, a lot of completions of late, of recent years. Are these, where are the tenants coming from? Are there any tenants looking in those areas? Where are those tenants coming from? And are people taking advantage of this to actually renegotiate their rents? You mentioned that earlier, or actually vacate and go and shop for a much cheaper rent elsewhere?
We've been very fortunate in that about 88% of all of our tenants are actually on leases. So people who are on leases are less able to move, but certainly people who are rolling off lease are looking for flexibility, they're looking for rent reductions, or they're looking to move, and that will depend on their own situation. So I think when you're talking about those areas where there is an oversupply, there already was an oversupply in those areas, so it has been exacerbated. But remember, we don't have people coming in from overseas at the moment as well. So not just students, but other workers. So that is definitely affecting the vacancy rate in suburbs closer to the city as well.
And then, of course, you'd have Airbnb stock that hasn't been getting the short-term renters.
Correct. So all of that stock came onto the long-term market. Although there are some people still doing Airbnb and they're doing okay. But yeah, we saw an influx in March of that stock, and actually we got that leased.
And are you seeing many people actually at the end of their lease deciding to, and I realise it's only a short period of time really for leases to expire, but are you seeing many people that are actually saying, well, that's it, I want a drastic reduction, or I'm going to move?
I think we're going to see more of that. And as I say, our portfolio is less affected because of the high proportion of our tenants on leases. But look, I think that's inevitable, Veronica, that the market has shifted. You and I have talked about it. It's about 8 to 15% reduction in rents across the board, and the difference being the quality of the property. If it's a good quality property, good location, etc., then you're probably likely to be at the lower end of that spectrum.
Have you seen evidence of landlords deciding to sell because of these lower yields?
I've seen evidence of landlords looking to sell because of an opportunity that they see in the marketplace at this point in time due to low stock levels, not necessarily due to financial distress.
Interesting. So I guess the message here is to look beyond the headlines and really understand local dynamics. I really appreciate you sharing these insights with us, Lisa, and all the best as all the leases start expiring.
We'll just get them signed up, Veronica. Thanks for having me.